In this video, I'm going to show you 5 tips that you can use to protect yourself from the coming housing bubble burst. Hi, welcome to Money Invest. In this video, I'm going to talk about the coming housing bubble and how you can prepare for it. A lot of people are talking about this issue, but not a lot of them are giving actionable advice on what to do. That's why I'm here. I'm going to give you 5 tips that you can use to insulate yourself from the fallout of the housing market crash. So please stick around and watch the whole thing because it could save your financial future. So what is a housing bubble anyway? Simply put, a housing bubble is when the price of a particular good or service becomes artificially inflated. This happens when people start to buy things not because they need them, but because they think that the price will only go up in the future. And oftentimes, this isn't just limited to housing. It can happen with any type of asset, like stocks, gold, or oil. The first documented speculative bubble occurred in the 17th century in Holland and is now known as TULIP mania. This was a time when the prices for some recently introduced and fashionable tulip bulbs skyrocketed rapidly, only to plummet significantly. What are the prospects for the 2022 real estate market? The real estate market is at an all-time high, with investment in real estate on the rise. This time it's not from unqualified buyers who are purchasing property with subprime loans, as it was in 2008. Instead, huge institutional investors are snapping up single-family houses by the hundreds of thousands. These firms, looking to cash in on the high rents and a housing scarcity that will take 20 to 30 years to fix, have amassed billions, yes, with a B, of dollars and are frequently using them to pay market price or more for houses all across the United States. With demand constantly increasing and inventory dwindling, regular homeowners like you and me are having to offer 10% to 20% above asking price in order to secure a deal on a property. These fundamental economic processes have caused house prices to climb by more than 40% in just the past year in some areas. Other elements that contribute to the rise in housing prices include the sudden expansion of remote work, changing migration patterns, and a lack of supply. Now, there's no telling when a housing bubble will burst. It could be tomorrow, it could be 5 years from now. But one thing is for sure, it's coming. The only question is, how bad will it be? Let us know what you think in the comments. If you're enjoying this video and want to help our channel grow, please subscribe and click that like button. The interest rate is the most important variable that might alter house appreciation's course. Interest rates will be increased throughout 2022 by the federal government as inflation rises. This is very probable to influence rapid housing appreciation, but it isn't sufficient to cause home values to drop. As we all know, armed conflict can have a detrimental influence on the economy. With Russia's invasion of Ukraine, even a potential United States war with Russia might harm the expanding housing market. So what can you do to protect yourself? The first thing you need to do is be aware that this is happening. Be informed and don't let anyone tell you that everything is fine and there's nothing to worry about. Discover real estate news that is relevant to your area. The housing market in Boston, for example, may differ significantly from that in Chicago or San Francisco. National real estate news is beneficial. However, don't ignore the latest from your region to get a more accurate idea of what's ahead. Second, start diversifying your assets. If you have all your eggs in one basket, and that basket is real estate, you're going to be in for a rude awakening when the bubble bursts. Diversify into other investments like stocks, bonds, and precious metals. Check out our video for the best passive income to protect your money. Click the link in the top right corner or in the description below. So, how diverse should your portfolio be? There is no secret formula for determining how diversified your portfolio should be. A simple guideline, however, is to include assets in your portfolio that are not correlated with one another. That way, if a market event affects a particular portion of your portfolio, it either has no effect on the rest of your portfolio or has the reverse impact on another portion of your portfolio. Third, if you're a homeowner, start paying down your mortgage now. The sooner you can get rid of your debt, the better off you'll be when the market crashes. Biweekly mortgage payments or extra monthly payment are two options for adding extra mortgage payments to speed up the payback timetable. The first option is to divide your monthly mortgage payment in half and make biweekly payments instead. Rather of making 12 months worth of payments in 1 year, you'll make 13, which saves money on interest. For some people, this approach might be simple since it isn't noticeable in the monthly budget. The second option is to make a total principal payment each month or to pay an extra principal payment each year. It can save you hundreds of dollars in interest over the life of the loan. Fourth, if you're thinking of buying a house, don't do it now. During the COVID pandemic, house values rose as a result of government initiatives such as the Stamp Duty holiday and the new mortgage guarantee, as well as the race for space, which saw more people seeking for bigger houses following their transition to working from home. So it's best to wait until prices have stabilized and the market has corrected. This could take a few years, but it will be worth it in the end. Fifth, and finally, remember that this is a cyclical industry. Whatever optimism there is for house sellers today, a brief look into the past reminds us that what goes up must come down. The challenge is to recall why each crash occurred and to notice similarities between our current market and any previous one. In the early 2000s, just about anybody with a pulse was able to obtain a mortgage, and house values swiftly rose. By 2006, borrowers on adjustable rate loans saw their payments increase, some by 60%. In 2007, when the market slowed to a halt, and then completely collapsed as hundreds of thousands of houses went into foreclosure, thousands of people lost everything they owned. So don't get too attached to your house or any other type of asset. Be prepared to lose it all if things go south. Despite the fact that more financial and legal safeguards are in place to protect the economy than in previous years, we still don't know whether we're presently in a housing bubble. Real estate bubbles, on the other hand, do occur from time to time, leaving it critical for consumers to think about what measures they may take to protect themselves against a possible house purchase or investment before they occur. On the bright side, by conducting some preliminary research and planning, you may discover methods and resources that can assist you in protecting yourself. You can also get a stronger grip on the many financial tools available to you. For example, house refinancing alternatives, rate changes, government-backed home purchase incentives, and so on. Productivity pays, and it may save you a lot of money in the long run if you take action now. Thanks for watching. I hope these tips were helpful. Please like and subscribe if you want more content like this. And as always, feel free to comment below with your thoughts and opinions.